one thing that's constant in any real estate investment is cash flow. Property must cash flow. That means that the rent comes in, pays all the bill, and pays the mortgage, and there's something left over. Okay? That is critical because in the old market, in the bubble, that idea of cash flow completely went out the window. Nobody was thinking about it. Okay? Now, let me just make this point, because I know there's people who flip in here. I flip as well. Flip properties are different than rental cash flow properties. Okay? Those are two different things. When you buy a property with the intention of flipping it for a profit, that's a separate thing. It's treated differently from a tax standpoint than when you buy a property to rent it out. Okay? Still a lot of money to be made in flip property. Okay? That's why I'm doing it to create capital. Just understand, if you're going to buy and flip property, make sure you do a strict analysis of the cost of the property you're buying, the cost of the renovation, the cost of the money. Okay? Even if you pay cash with your own cash, there's an opportunity cost. Here's what that means. If you put your cash somewhere else, and that was going to generate a return for you, that you have to weigh that in. Even if you pay cash for a flipped property, you have to weigh that cost of the money. In most cases, we're not paying cash. We're getting hard money and we're investing, so there's a high cost. So you got to be aware of that. You got to analyze that. Okay? And you have to make sure that when you sell that property, there's enough spread, there's enough profit on it, okay, for it to make sense. Don't ever do anything that is you're buying it for a market price. You're going to construct it with market, price, construction prices, and then sell it for a market. You're not going to make any money. You have to be legal. So just understand that if you're going to flip. And that's the last thing I'll say about flip, because we're going to really spend some time on the topic of cash flow. Understand that though, because flipping can make you a lot of money. And if you do it right, it can put you out of business if you do it wrong. So just understand that. Okay? Just understand that. So the topic of tonight's presentation is multifamily investing. Okay? As I said when I did my introduction, that's our niche, that's our focus, multifamily property. All right? Some of the benefits from multifamily property versus some of the other properties when we own them for cash flow. First of all, it's probably going to represent the most stable cash flow during the whole period. The whole period being the time that you own the property. Okay? It's probably going to represent the most stable cash flow when you compare it to retail property, when you compare it to office property, when you compare it to industrial property for sure, hospitality. Okay? Also, when you look at single-family homes. Now, single-family homes are very easy to rent out as long as you rent them at the right price. Here's the challenge. When that tenant moves, right? When that tenant relocates, whatever they do, you went from being 100% occupied to being 100% vacant. Again, not that big of a deal as long as you budget that into what you're doing. However, what multifamily properties offer that single families and condos don't offer is that when somebody moves out, if you got a fourplex and you still got 3 other people, there's still income coming in. You can still pay your mortgage, you can still pay your bills. Okay, if you got a single family home, somebody moves out, you got to put a couple $3,000 into fixing it, and then you got to go to the market to rent out. That could be a month, 2 months. If you don't have reserve, if you don't have cash saved up, that can put you in a bind. Because regardless of your situation, the bank wants their money, right? Bank don't care. They would love to foreclose your property, especially if you have equity. So if you're investing in a single family home, keep that in mind. The benefit of multifamily, you got a fourplex, one person moves out. Ideally, if you've done your numbers right, the other 3 rents, they'll pay for your bills, they'll pay for your mortgage. Hopefully you have something on the financing. You're going to push that. Financing. Okay? Steve, you could probably attest to this. You just refinanced your 18-unit building. Think your rate, what's your rate if you don't mind sharing with us?
4.3.
4.3%. You got an 18-unit building? 18 units. 4.3%. Now you probably, I know for single families, you probably get something in the 3s right now. Okay? But let's 4.3%. You ain't gonna get, I'm not gonna get 4.3% on this loan here, on this property. Most likely. Probably not gonna get that. Okay? Definitely not gonna get that on an office building or an industrial property or hospitality. You're not gonna get that. And banks, lenders, institutions, what they like about multifamily is the stable cash flow. Even in the worst economic periods, apartments have outperformed the other asset classes by far. So that's, part of the reason that, I chose to focus on apartments. When you got 20 to 30 units, you can lose 5 tenants and still be okay. Okay, you can get more accomplished. Those tenants are paying down your mortgage, it's probably a larger mortgage. Okay, so you have economy of scale because you're dealing with bigger numbers. Also, what I like with apartments is an excellent generator of wealth. So if you have no cash, but you have some ambition about yourself, you put together a group of family, friends, or associates, you got some capital, go out and buy a property, now you've begun to build wealth. Okay? It's also an excellent preserver of wealth. If you've made your money, your profession, your life, your other business, whatever, you got a stack of cash. You're saying, what am I supposed to do with this cash? We talked about the volatility of the stock market earlier. We talked about some other things. Well, a great place to put your money is into apartment growth. If you're just looking to keep it safe and have it to grow, keep up with inflation. Talk about inflation. Lastly, apartments prices. We talked about the drop in prices, in real estate overall. Apartment prices